Welcome people to episode 1 of the Funded Talent Challenge. It's not really a challenge, but I just call it a challenge just to keep it in line with some of the other challenges I'm doing. If you guys have seen my FTMO series of continuous failures trying to pass the FTMO, my career with Funded Talent has started off a little bit better. And I'm going to explain to you quickly the process of how to trade with Funded Talent and what their system is before I get into some of the trades that I've made. Let's go. Hi guys, it's Enny, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. So, Funded Talent. Someone inboxed me on Instagram and brought this to my attention, Funded Talent, and I thought, let me check it out. Now, the website looks a bit janky. It looks like it was made on WordPress, so I thought it was a scam at first. But I watched a couple videos of people saying that they've traded with them and they've withdrawn. So I thought, let me check it out. Let me check out what's the worst that can happen. So I checked it out, read about their terms and conditions, read about the what you had to do, and it sparked my interest. As you can see, the FTMO challenge hasn't been going well for me, so I thought, let me try Funded Talent. Not to say that anything's going to be different, because at the end of the day, it's still me trading, but I also thought, let me cut out Forex and just trade indices. If you know, that's what I'm doing going forward now. I explained that in episode 8 of the FTMO challenge, if you want to check that out. But yeah, I'm going to trade indices primarily. So what is the Funded Talent challenge? Well, in layman terms, you can get a 100k account or a 25k account. Now you pay for either account. I think the 100k account is about £450, something like that, and 25k, let me find that actually. So you can get a 100k account or the 25k account. Now the 100k account is about £470, $610, something like that. And once you get the account, you can trade it straight away. Now you pay £250 a month to keep the account every month, but you get paid out every 2 weeks. And whatever profit you make on that demo account, you keep 10%. So currently I'm up 10%. So I've got a 100k account and I'm up 10k. So that means I would be paid back £1,000 in 2 weeks time. Now every month they reset your account and you start again, but you get paid out every 2 weeks. And the great thing about it is that even though you only get paid out 10% of that account, up to £5,000 you get put into a separate account. And once you get up to 15k, you get to trade with that 15k account and keep all of the profits. No, not all of the profits, 75% of the profits of that 15k account. Sounds a bit complicated, but basically the easiest way to see is that you trade with account, whatever profits you make, you keep 10%, and whatever profits you make on the account, the demo account, will go into a separate account. Once that separate account builds up to 15k, you can start trading it. Whatever you make on that 15k account, you keep 75% and they keep 25%. Every month you need to pay £250 pounds as kind of like a maintenance fee for the account. Not really much if you're trading a 100k account, because that's less than 1%. You could probably make that in one trade. So yeah, so that's what I'm doing. So where are we at so far? Well, unfortunately for me, I'm back to MT4. I hate MT4 so much, but I'm not gonna keep talking about that. As you can see here, I got the 100k account and I'm up 10%. It's so interesting how, oh, it's ridiculous. I took 4 attempts to take me to do the FTMO challenge and I couldn't do it. I spent a week doing another one and I'm up 10% on my account straight away. So all I did was cut out Forex trading and just stick to indices. Should have done that from the beginning of the FTMO, but anyway, we move. I'm up 10% on my account. So I would have actually passed the FTMO challenge if I had just traded the way I'm trading now. But either way, I'm up 10%. So I've got a 100k account. I'm up 10k. So that means that when it hits the withdrawal stage, which is next week for me, I'll be able to withdraw £1,000 as long as I don't lose all the money in this account. I'm actually still in 2 positions. I'm long on the Dow Jones and long on the DAX. I believe that there's going to be a recovery, but anyway, let me give you some analysis of some of the trades that I've made. And yeah, so I'm in 2 positions right now, down in the DAX, and I'm up 10% on my account. Unfortunately, there's no an analytical dashboard the way FTMO has. Hopefully they'll build on up eventually. So all I can really show you is some of the trades that I've made and I can discuss them with you. Rather than showing you this, because this is not really very interesting to look at, it looks pretty much like an Excel spreadsheet. I'm just going to go through into my pro real time and show you some of the technical analysis I did as to why I made some of the trades that I made and some of my best performing trades, what I saw that made me want to make those trades. So I'm just going to focus on 2 trades that I made in DAX that I'm really proud of. So one of them was when this sell-off happened, I actually didn't catch much of the sell-off, but what I did catch was the bounce back. Now what I saw here was that there was this line here, this gray line, which is like a key support and resistance level from, there's several gray lines that I've highlighted that are key supports and resistance levels on the daily and weekly chart. So they're always of importance. So I always try to look at those. Now what I saw here was that if you go down into like the 30-minute chart, I identified that it looked like it was trying to recover. So what I did was that I took a long around this area and took it all the way up to this resistance line, and then I sold it. So I actually made a really good trade because I took it here and I rode it all the way up here. The reason why I did that was because there's this broadening wedge pattern that was forming. If you're part of my Discord group called Pip Talks, you would know that I pointed this out. So I pointed out that I saw like a broadening wedge pattern. So this is just technical analysis theory. When the price falls like this, it'll test it. It'll make an A, B, C, D, go back down to support again, go to resistance, go halfway, and then break out to the upside. So what I did when I started identifying that this pattern was forming, I kind of tried to like scalp, I won't call it scalp it, but swinging it. So I tried to catch like a C to D trade, or it was more like from here to here. And I did that, and I took a lot of profits. Now that I identified that, I think that what will happen next is that I've also taken another long in this area. So what I identified about this little box here was that there was a lot of confluence happening in this area, which is why I took a long here. If you go on the daily chart, you can see that there's this support and resistance channel that has been built up since about June, and as you can see there, it's hit this support line once, twice, and now kind of on the 3rd time, not quite hit it. So it might actually go down again and hit it clean, because it actually hasn't fully touched it, but it's close. And then we have this gray line. I don't know if you can see this gray line here, which is like a key support and resistance level. I'm going to change it to another color so it's just easier for you guys to see. I'm going to make it red and I'm going to make it thick. So if you see this red line here, it's a key previous support and resistance level. As you can see here, it held as a support here before, held as like a support here, and now it kind of price just kissed it before retracing back up. So then when you go down to like the 2-hour chart, is it 2-hour chart? Then if you go down to the 2 or 4-hour chart, the bull flag that caused the initial breakout like last week, you can see that there was a bull flag here. Price was challenging downwards only to break out to the upside. Now the support line of that bull flag also met with where price drops to. So there was a lot of confluence. This support line here, this key level here, and then also this on the weekly chart or on the daily chart, this previous support all the way down to June, all was converging at the same point. So I thought, okay, this could be a good entry point. So what I did was I took a long here and I set my stop loss just under this line, and I thought, okay, this could be a pretty good trade, because this could pretty much be kind of like a risk-free trade. Minute I took a long here, price started climbing back up again, and I moved my stop loss just above my entry. So now it's a risk-free trade. I can kind of leave and walk away, and whatever happens, happens. Now we all know that on Monday it's going to be it's a US bank holiday, so the trading volume might be a bit low on the stateside, but in the UK trading still happens. So I expect the DAX to kind of be a bit lackluster, because there may not be that much trading volume stateside, but there'll still be European traders trading. But if it pushes up, that'll be good, because then the US stocks will be trying to play catch up, and then they'll be bullish as well. And if it sells off, I don't think it'll sell off, because there's so much confluence in this trade that I'm thinking this could potentially start recovering back up. And I feel like it's going to recover back up for several reasons. Kind of one of the reasons that it's found the support here. This was kind of like pretty much a pullback, and I think it's going to carry on as business as usual afterwards. Also because of the broadening wedge pattern that I said I identified with the A, B, C, D. Well, let me put this A, B, C, D. Let me draw it on the letters. So what I think is going to happen next week is that there's going to be obviously it'll continue following the pattern, and it's done a ricochet, the A, B, C, D, and then it's found the support here, climbed up. It might sell off a little bit, but I don't see it coming back down to this line. And if it does hit this line, then that's a breaker pattern. So I've already set my stop loss just here, because I don't see it coming back down and retesting this line again. I think it comes down a little bit, but then it'll climb up. And then once it climbs up, it will test this line here, come down, retest here, and then climb all the way up to about 13,600. The reason why I say this area 13,600 is the area because technical analysis theory shows us that the difference between this area and this area, which is about just shy of 400 pips, is going to be the distance between here and where you exit. So that's about, it's just under 400. If you want to give it a little bit of artistic license, you could say that the breakout will be here and that will be about 400. And that's around the 13,600 area. And lo and behold, that area is also where DAX call options, there's a high trading volume of DAX call options at around the 13,600 mark. So there's a lot of confluence. As we all know, the call options by institutional traders, normally they have more information than we do, and this is a key level that is of importance. So if it could get up to 13,600 before the end of the month, this person would have been right. And a lot of times when there's high trading volume, there's some information that maybe they think they have that maybe us as retail traders do not have. So it's just something to think about. It's not necessarily always going to be right, but I think that that's something important to look at. And it falls in line with my theory as well, because technical analysis theory shows that the distance between the base and the center is also the distance between the breakout and the take profit zone. So that's why I think that's why I've taken a long on the DAX, and I'm going to try and hold it hopefully higher up. Knowing myself, I'll probably exit here because I just want to realize profits. But if it comes back down and then starts making a breakout, I'll probably re-enter again. But yeah, that's the idea behind the trade. And this is why I've taken like a big position long on the DAX and a smaller position long on the Dow Jones. Hopefully we'll see a bullish move, and yeah, that's all it is right now. These are the two positions I'm in. I think I've started off well, and I hopefully that now that I've kind of cut out Forex out of my trading, I can start realizing more profits more frequently. But I will still be learning Forex in the background, but I'm not going to come back trading that until I've on my account, well, on my channel anyway, until I feel like I'm at a level where I've sorted out the kinks in my strategy and the way I trade. So yeah, that's me, Any aka the NocTrader, signing out.